Namaskar. Hello and welcome to PGurus channel. This is a special session DGI 379 about the dollar. Why is it that it is the reference currency of the world? What makes it so powerful? And are Russia and China daydreaming when they are saying that they are going to usher in a new currency based on the gold system? What are the pitfalls about that? To know all about these and more, I have our co-host 𝙒𝙧𝙤𝙪𝙥𝙥, who's going to walk us through a whole bunch of data that will basically give his viewpoint on what he thinks is headed in the future. Sridharji, namaskar and welcome to PGurus channel.
Namaskar. I think good morning to everybody. Happy to be here. This is one of the sought after topics, which is namely the deleveraging of the US dollar. I think much being talked and touted. So it would be useful to provide a context and for people to make their own judgments and frame what they think is the most appropriate solutions as several countries attempt to deleverage from US dollar, and the term that is often used, emotive or otherwise, to break the dollar hegemony. That's the term.
Yes, indeed, sir. Every time I have a show on video every time I have a show on China, I get five monkeys who will come and give verbal diarrhea on the comment section. I expect some of them to jump to this one also, but more the merrier. Let them come. We have our data. Take it away, sir.
Great. I think that we basically, to set the objective is that we will walk through this. This is, as you can see, data sourced from people who have done work on this rather than our invention or my invention, but basically to structure it in a manner that is self-evident in terms of where we are today and where have we come from and where we are going when you look at all the market predictions in terms of 2030 to 2050. So I think that is what we are trying to provide a framework. So what to know about the US dollar as the global currency? Go back to 1944. The much touted Bretton Woods Agreement formed the basis where 44 nations agreed with one of the famous economists, John Martin Maynard Keynes, along with Dexter Woods, that you need a mechanism by which you establish stability in the foreign markets, peg it to a specific currency, and then establish a framework for providing monetary support to the world. So that was the first framework in 1944. Then it got implemented. And in 1971, Richard Nixon said, no, we're not going to have gold as the standard. And then he delisted and made United US dollar. And then on the basis of the US economy, most of the currencies began to peg themselves to the US dollar. And today, nearly 40% of the world's debt issued is in US dollars. But right into this falls countries like China, Russia, and even India to say how we can kind of deleverage from US dollar. Indian rupee, by the way, today is pegged at US dollar and it floats on other currencies. This is the framework of the discussion. Going to the next slide. So, previous.
Sorry. 1 second, sir. Go ahead.
So what happens under the current system? US Fed, that is the reason why we keep providing the US rates. US Fed provides lending to the major central banks in the world. And in this instance, European Central Bank, Bank of England, Bank of Japan, Swiss National Bank, and they in turn provide capital to the financial institutions within their ecosystem. The financial institutions in the ecosystem provide collateral to the central banks. The central banks provide liquidity. Then the central banks in turn, take liquidity from the Fed. And in case there's a default, then there is a collateral to back it. We saw what happened in 2008. We have seen it before. Most recently, what happened in 2008, 2009. Then the systems kind of came together. So therefore, this is the structure today as it exists from the Bretton Woods. The Bretton Woods collapsed in subsequent years, but the system has kind of prevailed. and this is the flow of money. And everything works because it is based on the strength of the Fed and the strength and the robustness of the US ecosystem or the US economic system. So now we go to rationalize as to why the US dollar is very, very strong, and US dollars, why the world is basically using US dollar as a mechanism. The next slide will interestingly provide that framework. The next slide. So this is the debt, official foreign exchange reserve, not debt, official foreign exchange reserve, which is allocated by various kind of currencies. Today, as at Q2 2022, we haven't updated to Q3. There's about $12 trillion of reserves, of which $11.174 trillion is allocated, of which $6.652 trillion is sitting in US dollar reserves. So this is country like India, etc. Everybody who is holding, for example, Japan is holding like 1.4 trillion, China is holding 950 billion, etc. So you have close to $6.652 trillion of claims on US dollar, which is the single largest, roughly representing almost close to 50% or 45%. Then you add euro, which is the second major. Euro debt is allocated in euros. $2.2 trillion is allocated. Now let's look at Chinese renminbi. We have stated this in quite a few of the sessions. The debt that is on a claim to be made on renminbi is very, very small because there is no mechanism or system from an enforcement. Most of it is Russia. It's about 322 billion renminbi is in US dollars is in renminbi. You go down, Japanese yen, 576 billion. Claims on Australian dollars. Even Australian dollars is as good as many other currencies. So across the currencies, you have Canadian dollars, you have the British pounds, you have the euros, you have the renminbi, you have the Swiss francs, and then you have other currencies or other resources or other currencies of about 351 billion, and not yet allocated is about 861. So the dollar and euro roughly represents a significant part of the allocation, and you will see this trend continue. This is as we look at the world today. Now, will the world change? We'll come to that in due course as we continue the presentation. The next slide. So now I think the first question is, okay, that is the allocation of the reserves. What is the most active currency in the international payment systems? This is in 2021. This is the data from the SWIFT. If you take a look at it, the number is pretty close to 40.51% of the global payments happens in US dollars. Close to 36.58% or 6% happens in the euros. Again, this is a data that we have covered in one of the market sections or one of the DGIs, where we have stated the renminbi and Russian ruble doesn't feature. Renminbi constitutes less than 3%. Even Japanese yen and Canadian dollars are somewhere in Japanese yen is clearly about 2%. Then when you take a look at these other currencies which make up the global payment system, they're well below 2%. So China has a long way to go in terms of a currency of use, because there is very strict controls exercised by the Chinese government. There are repatriation restrictions that the Chinese have. So notwithstanding its economic growth, it has not been a major currency of choice from an international payments. Sridharji.
Sridharji, before we go to the next question, next slide, I have a question, sir. The question is as follows. Trade with China used to be that everything happened through the Hong Kong dollars. So you had the Hong Kong dollar pegged to the United States dollar between a range of 7.69 to 7.79 or some very, very tight range.
Correct.
And then from there, it used to, the Chinese had some sort of an exchange mechanism with the Hong Kong dollar, and that's how it went into China and vice versa. Is this still continuing, sir? Because one of the challenges that we are having, and even China has, is to make the world accept its currency in lieu of the US dollar. In this, unless it weans itself away from this intermediate currency, which is the Hong Kong dollar, how can China even claim that renminbi can float on its own?
Well, I think there are several questions within this one question. The first and foremost question is, there are existing contracts, or there are prior contracts that Hong Kong traded through Hong Kong. Doesn't matter whether it is trade or whether it is payment contracts or whether any other types of security settlement obligations. All those transactions they would need to meet, and they will run it down until those things are completed. Hong Kong Monetary Authority, which used to regulate and manage these things, is now very much integrated into Bank of China, right? So now everything is Bank of China. But notwithstanding, they run a separate ledger, which is called as HK dollar, until these contracts and obligations are paid out within the banking ecosystem. As far as the future is concerned, I think it is going renminbi. There is unless and until Emperor Xi Jinping attains nirvana and says that I'm going to have dual currencies, HKD and renminbi, then I think we'll very rapidly see the demise of the HKD as a standalone currency. Remember, this is about unification of China, one China policy, one nation, one currency, one army, and one land. So if that is the case, you cannot have one nation and with three currencies. Not possible. Not at least according to Emperor Xi Jinping.
That's how they became this big, sir. But anyway, just my 2 cents. Please continue, sir. Sorry for the interruption.
No. I think it's a great question, which is namely to say how the world needs to struggle and toggle as they try to transition to achieve an economic integration. See, remember, this is a very good example called EU. EU was a monetary union, called European Monetary Union. It's not one single nation called Europe. It is the integration of the monetary economic system and currency. So they created the concept called SEPA, Separate European Payment Area. So you had Italian version of euro, you had the German version of the euro, you had the Austrian version of the euro, all need to be cleared through the central banking systems. So they progressively achieved what you call as the European Monetary Union, and it took several years after the was established. So Hong Kong may be a little smaller, but they may be able to achieve the integration. But this is very much what world needs to look at if it wants to go towards an alternate single currency. This is a very good example. So this is the segue to, I'm trying to answer several questions as people try to frame this. So in terms of the payments today, 86, close to 80% of the payments, if you include all other Western nations or what we call G7 nations, very insignificant as far as China is concerned, and very insignificant as far as Russia doesn't feature at all. Okay, so in the kind of as a global payment system, as a player of global payment system. So the first is we touched on where the reserves are held by currency. Now we are talking about how the payment flows are happening and what the volume of the payment flows are. Now we go into the markets, because markets is another important mechanism, and we will go into the global markets, and this is the equities markets. So the next slide will talk about the equities market. So if you take a look at the equities markets, you have two very important charts. One is we need to anchor on US dollar and establish why US is one of the important pivots or pillars of choice. And that then became the framework for the world. So if you take the equities markets, the global equities markets is around $111 trillion as we speak, or it has probably come down slightly, of which close to 46% of the global equities markets share is in United States. Okay, so roughly okay, 50 trillion dollars of market cap is resident within the US market, giving it the strength that one would talk about. So you want to raise equity. Your company wants to raise equity. They basically go to the United States, get themselves listed in NASDAQ, or they get themselves mostly in NASDAQ, because the listing rules are very strong as far as the NYSE is concerned. Only 30 companies make the Dow, and then the NASDAQ has n number of companies. And the index is called the S&P 500 index. Now, there's a listing rules. They get listed, notwithstanding, I see lots of criticism from India. Many of them go and raise equity and get themselves listed because there's depth in the market, there's volume in the market. So that provides the kind of the framework. So 46% of the equity market makes up the United States as we speak today. In 30 years from today, it can reduce to 25% or 30%. And let's assume in 30 years, the market grows to about 200 to 250 trillion. It's still a significant market as far as the US is concerned as a base foundation. Okay, next. This is just a slide to basically give you, roughly what percentage of the S&P companies make up the 46 trillion. This is the Fortune 500 companies. The Fortune 500 companies make up roughly 80% of the US market cap. That is roughly around 32 trillion. Now we come to the third market, right? So we touched on the reserves, we touched on the payment flows, then we touched on the equities market, then now we come to the debt market. Okay, that's the reason why we project to you 10-year rates, 5-year rates, 2-year rates, 3 months rates, etc. What is the size of the US debt market? The size of the US debt market is around $53 trillion. That is people raising money domestically and funding various kinds of obligations. Corporations raise debt, mortgage business, that is the US mortgages are fully securitized, and people pay, fund through.
We seem to have a momentary drop from Dr. Sridhar's feed. That number is trillion, not billion. 53 billion. It's not 53 billion.
53,017 billion. 53,017 billion. That is 53 trillion.
Okay. That's a comma instead of a full stop. Sorry, sir.
Yeah. So that's the size of the market. The mortgage-backed securities, the asset-backed securities, which is namely you pledge your assets and take a loan. The treasury, which we talk about, the T-bills, which is roughly around $24 trillion of the treasury, by the way, of which 75% or 80% is funded from within the domestic market, very similar to India. Indian debt is funded by the Indian public, is very much only $6 trillion is lent to the sovereign governments. And then lastly, what they call as the muni bonds, which is a lot of states use that to fund. So again, this particular is roughly again 55 to 60% of the global debt market. So you have payments, you have the reserves, you have the equities, then you have the fixed income market, providing it the basic foundation of a market mechanism to raise capital and to basically deploy the capital for economic purposes. That is why it is called, it has got an economic foundation on which you can build the base. The next slide. The last one is, before we transition into other areas, is the currency. So which is the most active traded currency, right? The percentages are a little bit depending on the market, okay? The largest traded or used currency in volume is 88% is US dollar, then it begins to slide downwards. So you can take a look at renminbi. Where is renminbi? It's nowhere in the picture. Where is Indian rupee? Not yet. There's no depth as yet in the market, but it will pick up as time goes on. So euro, again, United States, euro, Japan, yen, etc. So if you go back to what you call as the G7, which became the founding kind of economic model, and then the 44 nations These are the nations which effectively decided that there is a robust financial system needed for the purpose of trading and for the purpose of borrowing and for the purpose of raising capital. So the structure evolved in United States with active support from the many nations, and the system thus far has evolved. And next we go to the next slide. Has evolved to the current state. So this is where we are going to kind of transition. This is a data from you can see this data. You would have seen this data from many different points. This is the Price Waterhouse report, which is to say that if what you call G7 is the today's major economies or the Western economies, by 2050, the G7 will be replaced by what we call as E7 economies. Sridharji, are you still there? I don't see you.
Yes, I am. Yes, I am.
Okay, sorry. Okay. So E7 is the emerging economies that will be by 2050. We'll look at this GDP in a PPP context shortly. So China won today in 2016 by PPP, not by GDP, by PPP. In 2050, it will be one. US is number 2, and US will be relegated to number 3, and India will occupy the number 2 position. And we will show in a chart as the trajectory moves on. Somewhere around 2035, India will bypass United States on PPP as the second largest economy in the world. And then there's no surprise here. Indonesia will become number 4. Brazil is number 5. Russia is number 6. Mexico is number 7. Why? In the last segment of the presentation, we'll respond, and that will provide the framework where the world can head to. The next slide. Okay, this is the evolution of, in 1995, E7 were half the size of G7. And in 2015, it became around the same size as G7. But in just 25 years from 15 to 40, E7 will be double the size of G7, when 51% of the global economy, or 51 to 54% of the global economy, will be in Asia. Asia is the future, and the big gorillas in the room are India and China making up the bulk. Then you have the other resurgent economies like Indonesia, Korea, Japan, Philippines, Malaysia, all coming into the foray, making all of them have populations which are somewhere between 75, with the exception of Philippines, 75 to 100 million people today. But by then, these populations would have also grown. So the world is going to change, and will the economic systems that plumbed the world, will it remain same or will it change, is the question. So before somebody says, I want to deleverage the dollar, we also need to look at how the wealth transformation has happened as an adjunct part of the GDP evolution. So that's the next slide. Okay. So it's a very interesting data.
Sridharji, before we continue, Sridharji, just one small request. Viewers, could you please like this video, and I would like it to go viral. There is so much information in this video. I mean, people keep having the same questions. Why can't India be this? Why can't something else be something else? And all that, you can dream anything you want, but it have to have basis. And that's what we are setting down here, how things came to what they are. We're saying that India is going to be number 2 in PPP in 2050. That is 28 years from now. Most of us will be gone by that time. However, a lot of things have to go right. And that's what is the part that we are going to talk about from here on in this presentation. Sridharji, this is fantastic. Hats off to you. We are about halfway into the presentation. That's why I'm saying, please like this video, this particular video, so that there's a better chance more people can watch it. Sridharji, over to you, sir.
Great. So thank you, Sridharji. Thank you so much. Before I, just to give one data point, but in 2030, by PPP, India will be about $20 trillion. United States is about 23.5 trillion. China will be 38 trillion. I think India is around just close to 12 trillion in PPP, or just over 12 trillion as we speak. And in 2000, I told you there's an inflection point. At 2040, India will be a 30 trillion PPP, and United States will be 28.3 trillion, and China will be a 47.4 trillion PPP. But here's the important data. The important data is by 2050, India would have pretty much narrowed down, and China will be around 58.5, and India will be around 45 trillion on PPP, and United States will be about 34 trillion. Just telling you that by 2050, India will be a major kind of an economic horse as far as the economic evolution is concerned. Now, coming to the wealth transformation, wealth has also transformed. What is the strength? We gave you the strength on the markets. Now, coming to the wealth of the nation, or the wealth of each of the regions and the nation. This is from Credit Suisse. This data is from Credit Suisse. Top 10 countries by wealth. Close to 31.5% of the wealth is in United States. Translated into dollar terms, roughly it represents $146 trillion of wealth is in United States. What is the wealth in combined Europe? $106 trillion. By the way, take a look at the China number, and we will show the trajectory. It is not very trivial. China's wealth is $85 trillion today. It is a tremendous kind of evolution for China as to where it has come. It has really powered not just the middle class, but it has exploded even the affluent sections. There are more billionaires now in China as well, roughly making up 18% of the wealth of the world sitting in China. Now, you take a look at the Asia-Pacific region. Asia-Pacific region is also roughly around 18% because it's only in 81 trillion versus 85 trillion. Then you can begin to see it begins to go down. So roughly, North America, China, and Asia-Pacific effectively plums the wealth of the world. As you go down, Latin America and Africa has got a long way to go. Obviously, people are interested in India. When you take a look at India's wealth today is around 14.225 trillion. This is as at 2021 data, roughly making up about 3.1% of the global wealth. So this is from a perspective of the economic wealth of the nation. The next slide. Now, this is just to give you the per capita. The reason we brought this slide is to put Taiwan, as to why Taiwan is important. It is the 5th largest per capita by region, 5th largest. And look at Singapore, it's the 6th largest per capita in assets, on net assets. Net assets means gross mortgages minus the debt, plus if you have any loans, take out those loans and leverages. That is the gross assets. This is the net per capita. So the net per capita, the gross per capita is given on the right hand side, and you can see Taiwan is in the 9th position, but in the net it is occupying the 5th position. Again, United States on the net wealth per capita. This is not just per capita. It's the net wealth per capita. It's right sitting at the top of the league. Obviously, India and China suffer from population challenges. So therefore, the number may be small, but the overall wealth is still a significant chunk of the activity. Why, therefore, a currency is important? Markets you need, reserves you need economic wealth, and then you need to create an economic system in which people can participate before you can say, okay, I'm going to deleverage from here. You want to deleverage from here. Then what would be your trading? Who is your trading partner? And in what currency you would be trading with that specific partner? It's good. If ruble or ruble India wants to do, great. If renminbi and rupee they want to do, great. But if your $100 billion of annual trade is sitting with United States, you won't be using renminbi or ruble. you have to necessarily use the US dollar. So nations have to make a choice. Most of the nations have made a choice, and right now they are looking at US dollar as the pegging mechanism. Actually, going back, to the Bretton Woods, the price itself was fixed as $35 an ounce for 1 ounce of gold was $35. That is how the US dollar was pegged. There was a run on the gold, and therefore Richard Nixon decided, no, US economy is strong, we'll put it on the US dollar. And US dollar became the de facto kind of the currency mechanism. Any other cross currencies that you are establishing, somebody told me that, there is a swap between India and Japan. Okay, $75 billion swap that was established. But you still have to go to a cross rate to establish. How do you establish a rate between Japanese yen and Indian rupee? What did they do? They went to LIBOR. You know what LIBOR is? It is the London interbank rate that is set by a bunch of banks in UK. So you need to go to a cross rate mechanism to establish a rate. You can't just simply say, okay, I agree to this and I stay there. Where's the inflation issue? Where's the currency depreciation issue? Where's the debt issue? Where's the settlement? All these factors people have to factor into account before they say, I'm stopping or I'm going to be the new currency of the world. Next slide. Okay. Now, we wanted to share this slide to show the evolution of the change of wealth. Around 2000, you can see in the topmost row, United States made up 37% of the global kind of the economic wealth. And what was China? Not in the picture. It was 3.1%. India, not in the picture. Japan, 16.5%. We can share this slide. But if you go down the path, 2021, Sridji, can we see without that footer? Because the footer is hiding the last piece of data. Otherwise, I can read the data. Yes, sorry, thank you. So if you can see the 2021, what is China's? 18.4%. We have already shared the data in the Credit Suisse 2021. What is United States national wealth? We have already stated 31.5%. So the margin of difference over the 20 years has been, I won't say significant, but very small. But who are the big losers? Take a look at Japan. Japan has come from about 16.5% to 5.5% of the global share of wealth. So clearly there has been erosion driven by several factors, including the currency, but also demographic dividends. Number of aged people, number of earning people all make up in the wealth creation process. India has also grown up, which is consistent with the number which we showed, is around making up the 3.1%. If this trajectory continues, then 2050 will be a very, very different number. But the United States and Europe as a combined will continue to be a material player, and US will continue to be a fairly dominant player with $154 trillion of economic wealth in the nation as we speak today, and it could very well be another $100 trillion in the next 20 years or the next 30 years. Okay, so this is on the thing. So before we conclude, and with closing comments and kind of observations, we come to the final. What could be the currency and what they're going to do with it? This is where Russia and China is playing the part. You'll be surprised or not surprised. What is the number one nation where commodities is the economic wealth of the country? No surprise, Russia. Russia's resources, I'll go with the descending order. Number 10, Venezuela has resources of 15 trillion or 14.3 trillion. What does it make up of? It makes up of various kind of oil, diamonds, gold, natural. Everywhere you will see natural gas, untapped, not exploited. Okay, there's much opportunity for the world. There's plenty of energy. If people are willing to deploy capital and harness it, one can begin to see the economic wealth flow through. So Venezuela occupies number 10 position at 14.3 trillion. Number 9 is I think, what's number 9? Number 8 is Australia. Next slide.
Iraq
is number 9 at 15.9 or 16 trillion. Again, what I'm amazed about is they have lots of chemicals and minerals, not just purely oil, untapped, not harnessed, because most of the places are inundated with war and activities. Australia has always been called a commodity currency. Australia occupies the 18th position at $20 trillion. The 7th, next slide, is Brazil. No surprise again. $22 trillion is the national resources wealth, not the others. This is just the resources wealth. We're not talking about what their equities, the national wealth, etc. This is purely the resources as a source of wealth. So Brazil is about 22 trillion. The next slide. Now comes China. So China does have, and occupying the 6th position, is at $23 trillion. So when emperor makes a claim, he has a lot of strength in making this claim, ranging from his national wealth to manufacturing, to his reserves, to the natural resources which is present within China. So therefore, he stands justified, but he doesn't need to be a brinkman. Number 5, Iran. Again, untapped, 27.3 trillion. They're still struggling with oil because of sanctions and so on. They have oil, they have gas, they have coal, they have even rare metals like chromium. They have copper and iron ore. So there is plenty that Iran can also offer to the world once it comes mainstream. So there is some kind of rationale as to why Russia is trying to group and create this gigantic, resource-rich commodity currency world comprising of Russia, China, Iran. They're trying to woo India to be part of it, and they may pick up nations like Venezuela, etc., into this specific group with very specific political mindedness. Canada, the next one, number 4, 33.2 trillion. Now you add United States and Canada and Mexico, then you can see why the North American Free Trade Agreement, or NAFTA, why there is this loose coalition as far as the North America is concerned, from a resource as well as manufacturing and other types of capabilities. Number 3. Next slide. Number 3 is Saudi Arabia, only one, but Saudi also has natural gas, has untapped gold, has some phosphate and aluminum, and they're about $35 trillion of natural resources. This is all data that is picked up by the global mining through and United Nations through seismic studies, through satellite studies and observations, and they have tapped and recorded the rough estimates of the source of the value of the natural resources. The next one. United States is 45 trillion. So United States is rich in all facets, from markets to reserves to currency to wealth to the very rich resource nation. We don't need to say shale gas, natural gas, the fossil fuels. Actually, United States is the largest, one of the third largest producer of coal. I think India is number 1 in coal, and United States is the third largest, accounting for about 27% of the world's resources. So again, this is what gives the US the strength. And lastly, the Russia. And look at Russia's resources, $75 trillion. Why they have interest in Ukraine? The 90% of the inert gases which is used, this is argon, etc., is neon, argon, etc., which is used as a material in many cheap manufacturing, of which is located in Ukraine. Ukraine is also one of the largest producers of cereals, second largest producer of wheat. So there is a lot of synergies as to why Russia wants Ukraine to be moving this from $75 trillion upwards towards maybe $80 trillion. Hence, there is the interest. So where do we come to? You have these nations which are aspiring from a resources point of view, and these are commodity-rich countries which doesn't like US dollar hegemony, because for them to trade, they need to go through what you call SWIFT. They need to go through payment systems. They need to raise capital in debt markets. 85% of that is between United States and Europe. If they have to raise equity, then again, they have to go to the established markets. So there is less interest to be compliant with the norms in those markets. They're saying we are resource-rich nations. So how can we come up with either an alternative currency, or how can we come up with deleveraging from US dollar, or can we come up with a better model? There is no answer. Even when we go back to 1944, it took almost 30, 35 years for them to come up with all these systems and balances and mechanisms in place, and to change the banking systems to accommodate seamless flow of money. Now, with that, I'll leave I think I've done this slide. I'll leave it to Sriji to ask a few questions.
Sridharji, take a sip of water, sir. You've been talking non-stop for close to 40 minutes and all pure data, mind-blowing. And see, if somebody wants to, take this on, they have to be able to actually answer each and every slide that has been presented here. This is just the data that exists today. And this didn't happen overnight. It took 1944 to 2022. That is 78 years. And it's not going to stop tomorrow. And they have tried many things. Bitcoin is one of those things. Because if you remember, the counterparty, even today, I will assume that the counterparty in most Bitcoin transactions is either Russia or China. And now Iran. So you see all these, moves in place to try and shake the dollar. But what is also going for the dollar, in my opinion, Sridharji, is that 60% of all dollar currency, all the dollars that US has printed, is outside of US. So many countries don't trust their own currency. Instead, within the country itself, they'd like to trade in dollars. Is this true or not, sir?
It is. In today's context, those who want to call the US dollar as a hegemony, they will use this new terminology. United States weaponized the world with US dollars. So that's exactly what they did. They weaponized the world with US dollar by creating an economic system which allows the participants to play, whether one calls it a fair way or a normal way, one can kind of debate. Well, today you can raise capital, you can trade, you can settle, and you can move forward. So the various market mechanisms that we gave that work seamlessly, and the banking systems that integrated, has enabled US dollar to be a currency of choice and a currency of strength as we speak today. Okay, whether things can change in 10 years. If EU is an example of economic integration or monetary union and the struggles, and by the way, we also had Brexit, Britain leaving the European Union and going back to pound, and not being part of. They still had that pound going, but they wanted to be part of the Brexit. Now they have EU, and then they have exited. I think I see several questions that are kind of coming through. So my observation is these are all, lots of people make lots of statements. Doesn't matter whether they are economists or whether they are scholars or whether they are pundits or whether they have to back it up by saying, okay, so Indian economy, what do you mean Indian economy is going to collapse? There's 1.4 billion people. The economy is not going to collapse. There is two data points in India. One is official gold reserves, unofficial gold reserves. Official gold reserves is a small percent. But unofficial gold reserves, it is stated, I don't know, I can't corroborate, I only reading data that I have seen, is equal to sum total of all the gold reserves, gold present in the world. I mean, 8.1 tons or something is United States, it is believed some 25,000, 8,100 tons. I mean, India is said to be some 25,000 tons of gold. So Indian economy is not going to collapse. Indian economy has got political problems. The problems of Indian economic system is the political instability with the main parties swinging from one side to the other. The fortunate thing about United States is that United States politics doesn't get itself into the operational aspects of the economic system. It doesn't. They only change, they can dabble with taking the taxpayers' money. They can only do the balance sheet. We have covered this balance sheet issue as far as the US economic system is concerned. $4 trillion of revenue, $6 trillion of expenses, receipts, of expenditure. It ranges from 1 trillion to 2 trillion to 2.5 trillion, depending on the COVID situation. At one point of time, our budget deficit, United States budget deficit was about 500 billion. Now it has blown, is somewhere around 1.5 trillion dollars. So that is what the governments interfere. They're not going to come and change the way the equities, the fixed income, the currencies, as well as the commodities markets work, and they can go on. The question around whether the Saudi Arabia can delink itself from US dollar, by all means, go ahead. You know where the Saudi oil is traded from? Saudi oil is traded from Huston. If somebody is making an order and has to pay for it, that settlement happens in Huston. Then the order gets shipped. Why? Because Saudis didn't have an economic system. They had reserves, but they need to buy and sell. There has to be buyers and there has to be sellers. Somebody buys from Saudi and somebody sells it. So where is the orders placed and executed? Primarily Huston. And then, of course, there's feeder systems that has developed all around the world. Where did India buy the Russian, I forget the exact terminology, the black something, in Singapore? Because one of the London exchanges had a branch to sell. So it's not the question of somehow, Petro Dollar. Who is the capital? Capital that was put into Saudi to basically develop the infrastructure of the energy is the US capital. And they created the market economic system for Saudis to trade and receive the money. Where did they list Aramco? Where did they list? They didn't list in some Timbuktu exchange. You need a market depth and market players to raise capital to be the number one player. Where? Did they go to renminbi or did they go to Russia? Does Russia have a market making mechanism? Does Russia have a system? What have they done in the last since Cold War? It has remained a closed loop contrived model. Notwithstanding the quasi-market economic system that what so-called mixed market model that China has, I mean, even the Chinese companies can get devalued overnight if Emperor Xi Jinping decides that's what he likes to do. That's what happened to many of these, the Chinese corporations. So all
Alibaba.
Yeah. So all these people, because when you have a one-man rule who can wake up and do what he wants to do, then you don't have an efficient and transparent market system, right? So let's kind of, India, by the way, I just want to leave them. India is a very powerful economy. India will emerge to be a very powerful economy. Nobody can predict in 2050 whether there will be, what the boundaries and the construct of the nation is. But I believe that the core principles have been established in the last 10 years. In the last 75 years, India has kind of developed itself. By the way, India has a historical legacy of being one of the most powerful economies, and it is the progressive invasions and lack of harnessing its capabilities as what has put. And you will find many such things common even in Latin America. Latin America is very, very, very rich in natural resources. So the point that I'm trying to make is, to be a player of currency, you need a strong and robust and transparent and trustworthy system. And you can't just simply decide, we'll kind of decide and deleverage ourselves and become a pseudo player. Even to negotiate with Putin, he has to ask, what's the rate? Okay, for how many rupees, how many ruble I'm getting? Is it a barter between Modi ji and Vladimir Putin? They won't work. They can't translate that into the corporate and trading ecosystem. You can't, because if two people sit down and make a decision. So there is a lot of fine-grained enshrinement. Go back to the first slide and go back to the second slide as to how money flows and what is required in terms of the economic model to be a player. So this is what is required for the number 5 Russians and the Chinese to decide. China has not proposed and made what their de facto economic model be if renminbi has to be a mechanism. Number 1. Number 2, if somebody has to raise capital in renminbi in Shanghai and Beijing, what is the economic model that is available to the global players? They have not stated. Same thing with Russia. They have not stated. So you want to be, no problem. You can't put bombs and drones and say, I'll create an economic system. Of course, you'll do destruction. That's a different story. But to
Thank you very much.
Sorry, finished.
Thank you very much, Sridharji. He was in full flow. I didn't want to stop him. There are a few questions that our viewers have asked, and some of them are very thought-provoking. But overall picture, viewers, I have been crusading. Practically crusading is the only word I can say about why the National Stock Exchange has to be cleaned up. And the people who have let it run the way they have, they need to go to jail. They have to smell the air of the jail, because you cannot have another exchange along the lines of NSE in India. It will be a disaster. It will be a total unmitigated disaster. So now you understand why I have a 3-book series called the Money series, where I'm talking about money and what are the challenges that India has, what are the things that it needs to do to clean up. What Sridharji said is very, very valid. Absolutely on the dot. You have to, when it comes to finance, investing, you have to take the emotion out. Remember what Buffett said: be fearful when the world is greedy, and be greedy when the world is fearful. Thank you very much, Sridharji, and let's take some questions now. Maniaphobia wants to know what will happen in case Saudi OPEC develops a mechanism to go out of Petro Dollar, say based on gold backup. What will happen to India?
I think India can deal with whether it is a gold or whether it is a US dollar. India has both units of currency to deal with, and it will appropriately establish a banking mechanism to address the issue and continue to sustain its supply.
Everybody is missing one very fundamental point. Let's say India pays in gold. Where is Saudi Arabia going to keep that gold? In Saudi Arabia? Do they trust their own security to keep it there? No. It has to go to UK and be in Lloyd's, or in the United States in Fort Knox. See, you cannot just like that take away some of these Western systems. Next question, please.
Just Shriji, one more, just to point. Gold had a run on the gold. The gold value depreciated alarmingly. Remember, not too far ago, gold was about $2,500 to $3,000. Today, it is $1,650. Right. Saudi will get wiped out if Correct. They use gold as a mechanism. Okay, we're giving a technical answer, but the reality is very different.
Yes, I mean, everything has to be in moderation. You can't completely, throw everything in one basket. False Prestige wants to know, is there a norm saying security and intelligence agencies shall be holding a percentage of equity in specific government and private companies in US, Europe, or China?
I don't know. I'm not an expert in this specific domain, G, so I don't think I can answer this question as to whether security and intelligence agencies will be holding something. I don't know.
Sridharji, I heard rumors that the Central Bank of Switzerland was holding Facebook stock 3-4 years ago. And they were actually saying, let's buy Facebook. And now Facebook is down, what, 45%. So, it's a risk. There's a big risk when you take something like that, which is why the big banks, the central banks of the countries usually stay away from stock. It's too speculative. Next question, please. JBMRV wants to know, what percentage of India currency is backed by gold reserve?
I don't have an answer, sir. I haven't checked, and most of the Indian assets today, I think they have got out of the gold. They got back the gold back into their reserves. I think I think 1991 or 92 is the last time I recall. India went and pledged gold to get. Now they have built up a very strong reserves based on exports and other mechanisms. So they have a very resilient based on their economic model that they have built this $630 billion reserve. I just don't believe they have gold as in their equivalent to Fort Knox. US has equivalent to Fort Knox. US has Fort Knox, and similarly, many countries have, but I just don't believe they have pledged their gold and converted that into some kind of a reserve. Most of the nations are running on either the direct capital, a percentage of it is held, or they are built up their balances based on some of the exports and other factors.
Chakravarti Narsimhan wants to know how the official digital money plan play in India in future. It's a good question, and we have been mulling about an answer. Actually, we answered this question many DGIs ago. I remember clearly when the Far Eastern countries had developed a sort of a mechanism using digital currency. Sridharji, you are the expert. Please go ahead, sir.
Efficiency. It's efficiency. The main play is efficiency. Number one, India is experimenting with both. One is digital payments. If I recall, the latest in the last 2 to 3 days, what I have heard is the amount of cash that was used in purchases in the most recent Diwali events dramatically has come down and replaced by digital payments. So digital payments brings about efficiency, eliminates counterfeit, eliminates fake, and creates a very, very efficient and optimal payment system. The reason why they want to take UPI all around the world or RuPay all around the world is to make sure that the banking system is in the hands of the banks and the banking payment system is in the hands of the bank. So they don't need to abnormally charge a fee to the customers in terms of accessing capital. So digital is an endemic part of it. I think from a currency stability as well as from efficiency point of view, India has just started to experiment with a digital Indian rupee. One of the first nations that adopted is Japan. You have digital Japanese yen, especially for large value transactions in securities settlement and government payments. So it brings about a very stable mechanism and very efficient payment system. Digital is here and will be here.
Just to add to what Sridharji said, it is rumored that when Modi ji took office in 2014, that they found out 2 states in India, I won't name them, what they used to do is, there's a budget allocation and the states ask money from the center. That money would come from the center and go to one bank in the state that is like the predominant bank. And the money comes in there, and then the ruling polity of 400 people or something, they would just take that money and divide it among themselves. What development work? Nothing. This was the state of affairs in India. I won't name the state because I don't have the data to back it up. There were at least 2 states that were doing that. And when you have that kind of anarchy, this will impose the discipline, because whenever center transfers funds to the states, now they can do it digitally. Then when the state takes it and starts spending it, guess what? Every paisa has to be accounted. It has to come out from this. So that accounting, that tracing starts automatically being in place. Now you understand why Arvind Kejriwal, MK Stalin, Pinarayi Vijayan, every regional party, wah, 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 wah. Why? Because there is no more greasing available. That's the big challenge these people have. People don't understand some of the consequences of some of these major moves. I'm sorry to go on a rant, Sridharji, but I thought I should mention that here.
No, you should. I think so. It's an efficiency, which is, for example, money moves in microseconds. You transfer 1,000 rupees, money is in the bank account. You can see the credit immediately. You can pay somebody else. So imagine physical cash has to come to your hand in a remote location. It's impossible.
Yes. Even the counting machine makes mistakes. You can just go and withdraw 20,000 rupees in 200s and 500s, and you'll know what I'm talking about. Next question from Vijay Raghavan. Was banning Russia from SWIFT a mistake of a monumental proportion?
Banning any nation, I'm a banker, I'm not a politician. Banning any nation is not a good way to enforce. You can charge penalties, you can charge tariffs, which is to say, you will be charged a tariff, it will be held in a reserve for a reconstruction, and we will find a way by which we can enforce it. You can come up with what is a legally valid rule to make sure that nations which are not compliant with international norms, are made to adhere. But banning them is not a good outcome, and it doesn't produce anything constructive in the end. I thought we went through 10 slides, 10 different nations who constitute or make up the top 10 nations on natural resources. All you need to do is look at some of those nations. Look at Venezuela. The people are in deep strife, but yet it is one of the top 10 nations in the world. By keeping them out of the economic system, by keeping Cuba out of the economic system, by keeping Iran out of the economic system, we could avoid a catastrophe that we are facing today, which is energy security.
Next question, please. I think that was it. And viewers, here's a small request. Please show us your appreciation by donating to our cause. You can do it in two ways. You can click on the super thanks button in this video, which is in the bottom when you see where all the different buttons are. And then you can express your appreciation, whatever amount. We appreciate that. Or you can also donate using paypal.me/PGurus. If in case you are outside of India and you want to donate, that's an easy way to do that. I think there may be one more question, perhaps not. Anyway, Sridharji, from the bottom of my heart, we have worked on this for a while. I know you've worked very hard and pulling together all these things into a cogent presentation that a common person can understand. And see, sometimes emotion takes over. And you say, why can't we be this? Why can't we be that? Well, we have to get our basics right. That is the most important thing in all these things. The underlying thing is you need a banking system that is fair and transparent, which is what Sridharji has been saying. Unless you have that, everything else, depends upon this. This is the most fundamental block. This has been the way it has, and that look where it has taken America. Do you think America just like that was born rich? No. In fact, in 1776, if you cross the Appalachian Mountains, which is like 100 miles from the Atlantic, you were in West. You had another 3,000 miles to go before you hit Pacific. So my point is, all this happened because they got something right. Franklin got something right. Anyway, thank you so much, sir. If you want to add something to what I said, we'll be back again tomorrow for the DGI segment. But go ahead, sir.
No, thank you. I think that I hope we covered some of the important aspects of it. My final concluding comment would be, India deconstructed its trading and economic system, and with it, the collapse of it as an economic power. United States reconstructed and became, with US dollar, one of the most robust economic systems in the world, and hence it is enjoying the fruits of the labor. China, up until Mr. Xi Jinping, was on the right track. I have traveled to China extensively. from Hong Kong when nothing existed between 1987, 88 to 1992. Nothing. None of these economic provinces. There's hardly you have to go. You have to stay in Hong Kong and make your travel to Beijing and come back. But what China has done as an economic powerhouse is a remarkable kind of a transition. And you can see what has happened to all the ASEAN nations adjacent to China in the last 40 years, especially from 1980 to 2020. This is the reason why when you get to 2050, Asia will be the powerhouse of the world. India has got its act together in the last 10, 12 years. It's time that it continues to consolidate and becomes very much part of the great aspirational power that it wants to be. Those are my comments, Ji.
Thank you once again, Sridharji. And viewers will be back again bright and early tomorrow. Namaskar.
Namaskar. Thank you so much. Have a wonderful day.